Awesome. Okay. Good morning, everyone. My name is Andrew Gavin. I'm a lender here with Tried and True, licensed. I hang my real estate license here with Travis as well. I pretty much manage the loan side of the business. So if you have questions after this, you can reach out to me. I can help you myself, or I can connect you with one of the other LOs that works with us that might be a better fit for what you're working on or the area that you focus on. I know we have agents all over California, which is pretty awesome. So today, just wanted to go over the VA loan a little bit, couple of updates, just a couple of things that I wanted to share with you guys. Let you know, my opinion, the VA loan is probably the best loan that exists. It's you know, the way it works, how you qualify for it, who can use it is probably the biggest limiting factor. It's great that they give it to veterans and people that, military, Coast Guard, any type of service person. It's a great product. It would be awesome if there was something that worked this way for, the general public. And, the closest to that would probably be a conventional 3.5% down loan. But even some of the qualifications are still a little bit stricter on a conventional loan. Now, today's goal is to kind of get you guys up to speed and hopefully help you become a bigger fan of the VA loan and be more motivated to help your buyer clients use this loan, because it is an amazing product. As well as if you're on the selling side, if you're taking a lot of listings and you're receiving VA loans, this is probably the best offer and loan to take if you can get what your seller wants. And I'll explain that to you. But two equal buyers that, make the same income, have the same financial stability, I would go with the person using the VA loan every single time, because of the loan itself and what that does, what that allows that buyer to do outside of the actual loan and those requirements. So let me just start. I'm going to share my screen real quick, and we're going to go here. All right. So let's get that. Let's do that. Sorry. Spaz. All right. Are you guys, Travis, you seeing my screen? The VA loan, the best home loan?
I can, yes.
Excellent. Cool. Okay. So let's get started. Let's see if this is. All right. So the VA loan, it's a government-backed home loan. You can finance up to 100% of the purchase price. No county loan limits, which is a new thing for the last couple of years. No PMI, which is one of the things that most people talk about. And in my opinion, VA loan buyers are often the most qualified buyers to work with. So it's government backed. It's easier to qualify for. So the veteran that uses this, they have to meet very similar financial requirements and guidelines as a equally financially stable person using an FHA, conventional, a non-QM, any other type of loan. But there's a couple of little tricks within that allow a VA borrower a little bit of easier qualification. Most of the extra work that a VA borrower has to do is tied to the actual lender they're getting their loan from, which are called overlays by that particular lender. But the key to a VA loan and easier qualification is they base a lot of the decision making at underwriting on something called residual income. And that's different for the size of the buyers, the borrowers or buyers' family size. It comes into play with a little bit with the size of the property that they're wanting to buy. And it comes into play what part of the country they're in. I believe here in California right now, it's something like, it's very small, like maybe $900 a person, I think, per family member. It's very, very small and much easier to qualify for than just DTI on the front and back end and things like that. It's government backed, which means that this is how they get to go 100% because the government insures the loan to the lender for them. So again, another reason why there's no PMI. So a borrower can borrow up to 100% of the purchase price, but they don't have to. Now, there is what's called a funding fee that allows them to get this 100% financing. And that changes per, it's based off of the price of the property. And then it can be reduced or even eliminated completely based on the veteran's disability rating when they left the military. So a person with 100% disability, or I believe even as low as 10, can avoid paying that fee. So they can borrow 100%, they avoid the fee, and they take ownership of a house that they have. The only thing they've invested day one is closing costs. That again, that is one of the reasons why I think this loan is so powerful for that buyer. Any of your buyers in any situation would love to acquire a property with putting as little money down as possible. Because now, you know, this person could, this buyer could be purchasing it at $800,000. If they close in 30 days and they're not going to make a payment for another 60, and at that point, 60 days after ownership, the first money that they're really investing into that property could be $3,000-$4,000 of the mortgage payment. You know, maybe $5,000 at $8,000 at 100%. It could be. I haven't done that math enough to know that number. But you know, regardless, their income has already proved that they can qualify for that, so they can meet the requirements and live a normal life, paying that mortgage payment. But you know, now think about that. Let's go 12 months later. They've paid $4,500 a month, and that property could be worth $900,000 by then. So they've only paid $40,000 in mortgage, principal, and interest. And now their house is the property that they own and acquired with zero down is now worth potentially twice as much more than the amount of money they've actually paid over the year. So again, it puts them in a very powerful financial position by using this 100% loan. No county loan limit. So this is a big one. So going back to even using a conventional FHA, any other type of loan, you have a county loan limit, which puts them into what they call conforming loans. And those are basically the loans, if you see any advertisement anywhere about a super low rate, especially something that seems so low that you're like, oh my gosh, I got to tell someone about this. That's going to be that lender's probably one of their best rates based on a 30-year fixed inside a county loan limit, which would have put them in a conforming loan. It's always the lowest rate offered. Once you go above the county loan limit, that's called a jumbo loan for a conventional or FHA. At jumbo, there are jumbo VA loans, but it doesn't change anything. That's where this changes. And FHA won't go above that. So you're not getting an FHA loan above the county loan limit. You know, you have to go conventional, which then changes all the requirements for that financial situation. The VA buyer buying above the county loan limit, which is, you know, right now in San Diego and California, they're floating right around $800,000-900,000 as all of our different loan limits. But let's say that borrower wants to buy at $1 million. An FHA qualified buyer is not going to be able to do it. They're going to have to meet the conventional loan limit, the guidelines, I'm sorry, and that's going to be most likely 10 or 20% down. So on $1 million, that's $100,000 down payment. And there's significant different requirements to meet that, you know, financial request. With the VA loan, the income has to, meet the guidelines and the numbers, but we're still basing things off of residual income, which makes it easier qualifying. We're able to use those lower, easier qualifications to get that borrower into that house, and the VA will still loan at 100% at $1 million, at $1.5 million, at $2 million. Imagine telling your client, hey, you don't have to put $400,000 down on that $2 million purchase. You can keep that in your pocket and invest it somewhere else, do upgrades or whatever you want, if they could use a VA loan. Again, this is another reason why I say these are some of the best qualified buyers to work with, because this loan, by being able to qualify for this loan, it allows them to use their deposit money for lots of other things. It could just simply be, staying in a bank account, but that's up to them. But again, it does free up cash that doesn't have to get tied up into the property. And to qualify for this loan, if they've been in the military, they're also meeting more lenient guidelines. No private mortgage insurance. We kind of hit on this. So this is a government-backed loan. It's 100%. We know that every other loan type that there is, if you borrow less than, if your loan to value is less than 80%, you're going to pay PMI. There are some new programs that we have access to that have a hybrid of this that are at 89%, just at 90%. The rates are different. They're higher than the typical conventional would be, but it can be done. So, but no PMI, which means now this borrower is borrowing at 100%. They're not paying PMI. The PMI goes directly into any clients or any borrower's DTI for monthly income, again, limiting their qualification. So by not having that PMI, not having to put in, 150, 250, 350 into that monthly payment, it allows them to qualify to buy just a little bit more. So it's almost like you've probably seen the difference of when you've been working with a buyer that was looking at single family homes and then switched to look at a property that has a $400 HOA fee. And if you've looked at that, you've probably run into a situation where, oh my God, they actually don't qualify to buy an $800,000 single family home standalone and an $800,000 home that sits in a condo complex or a townhouse complex that has a $400 HOA fee, because it hits their DTI. Again, not having private mortgage insurance at 100% loan allows this borrower to use their money in more ways that benefit them, either towards the home purchase or towards the house after purchase, living their lives, making it easier to pay this mortgage payment. Again, another reason why it makes this borrower such a strong financial person to work with. VA borrowers, again, are the most, I've said this over and over, and let me explain a little bit more. So VA buyers, they need to put less money down. You're buying $800,000 house with 100% loan, and you have a VA funding fee that I believe if you're paying the full thing, it's about maybe 2.4 or 2.6% right now. So on that's a $16,000 payment. Call it 20 grand. They're going to pay that. That's also going to get wrapped into the loan. So they're going to get a loan for $800,000 plus the funding fee, which could be another $16,000, $17,000. So the government's they're guaranteeing this to the lender, saying that this person qualifies financially. We're going to back it. So that person's not going to have PMI, and they're going to take ownership of an $800,000 property and start building equity with only closing costs invested day one. This makes them very strong financial buyers. VA buyers can pay their own closing costs just like buyers using any other loan types. So this is a misconception. It's a myth that existed maybe 10 years ago. And over the years, there was a bunch of stuff that the VA didn't want um, the veteran to pay for. There's a couple of little what we would call junk fees that are still kind of on that list, but it's nothing that would ever come up that a seller would need to pay for, that a seller should worry about. And if a VA buyer is buying new construction, which is a very common place where VA loans are used because of the fashion or the way that military people come and they're here for 3-4 years at a time. They tend to buy these newer properties, and they can pay. If you've ever worked on a brand new construction property, you'll know that the buyer pays, I don't know, 95% of all the closing costs from both sides. There is no, we'll split this, you pay this half of escrow, seller pays title fees, taxes, all that stuff. The VA buyer can pay those for if they're buying a new construction property or if they're buying a resale property from your seller. So again, makes them, in this scenario with closing costs, it makes them equally as strong, if not stronger, than your buyer that is using a different type of loan. And while they're stronger is because they have zero of their own dollars from their savings account that they have to put into this loan, where everybody else is going to have at least 3 to 10 to 20% of the down payment to acquire that property, even if they're agreeing to pay all these closing costs in the current market. Okay, another myth that is tied to VAs is the appraisers and the appraisal do not need to meet any additional requirements above any other loan type. Now, it's pretty common that we also know that FHA loans, those appraisals are probably the strictest. And a VA loan, a VA appraiser and appraisal is not nearly as strict as an FHA might be. And the appraisers are the exact same appraisers that are appraising homes for buyers that are using an FHA, that are using a conventional loan, that are using a non-QM loan. They're the same people. They just have an additional opportunity to be one of the few that actually work with the VA and do those appraisals. Additionally, with VA appraisals, you have an opportunity to argue your points if the appraisal comes in low. Now, if an appraisal comes in low, most appraisers will send out what's called a tidewater and say they can't find enough information to say exactly what that property is for, and they'll ask for some help. Now, VA does this a lot too, but you can go, if that doesn't work, you can still go one step further and ask the VA to look at the data without the appraiser involved. So they take it on themselves. So again, you have a lot of opportunities to ensure that the appraisal comes in where it needs to be. We have a big issue with the appraisal and VA, but what you need to know mostly is that the appraisers are the same guys doing all the appraisers for any type of loan, any type of property, and the requirements are not any more strict than they would be on any other type of loan, especially something that's as high as 100%. Even a conventional loan at 3.5% is gonna require that the house meet, basic safety and health needs to be able to move in and live there immediately. To buy a property that maybe you're not moving into immediately because work needs to be done, regardless of the type of loan, you're going to need to put a lot more money down. It's just a different situation. VA buyers can waive their appraisal contingency. This is probably the biggest reason why we're hearing that people don't want to work with VA buyers, is they can't waive this contingency. There's actually a second addendum that California adds to your file, your loan offer, if you hit the VA as the type of loan that's being used. But they can absolutely, just like conventional, go ahead and waive that contingency. And waiving the contingency means that it doesn't matter what the appraisal comes in at. But that doesn't mean that there's no appraisal. And that's the same for conventional as well, or any other loan. Because the appraisal has to happen because the lender needs that information from that third party to finalize all the numbers from the loan. But what we see all the time is we hear that, oh, they waived their appraisal, went conventional, and they're going to pay whatever they want or would have agreed to for the house. A VA buyer absolutely 100% can do the same thing. Here's the evidence. This is the FHA VA addendum that gets added into the file. You can see this. I've highlighted this in yellow. What this says over here is the purchaser shall have the privilege and option to proceed with consummation of the contract without regard to the amount of the appraised valuation. This is right in the document. It's the next sentence after you put the purchase price into this document. Okay? So, yes, this has to be filled out. It has to be submitted to the seller, but the language is written in there. It's boilerplate California language that says, yeah, absolutely. If the VA buyer chooses to move forward knowing that this home did not appraise for the purchase price, they absolutely can. And just like a VA loan, or I'm sorry, a conventional loan, and any other type of loan, the lender is only going to loan based on the appraised amount or the purchase price, whichever one is lowest. That's how they're going to do all their math. So if a VA buyer and a conventional buyer made an offer on a house to pay $800,000, and that house came back and only appraised for $750K. I know, crazy thought. How could that ever happen in this market? But it's either of those two borrowers and buyers can pay the additional $50,000, that gap, to the seller and acquire the house. Now, here's where, again, the VA buyer becomes a stronger financial buyer. In that situation, both parties equally have the ability to pay the $50,000 out of pocket to the seller to meet that purchase price. At that point, the VA buyer only has to finish off paying closing costs. The conventional buyer still has to pay closing costs, just like the VA guy, but they also have to put 3, 5, 10, or 20% down of the $750 loan amount. So they could be still needing to put up to $150,000 more, or as low as, still at the lowest, maybe $25,000. So your VA buyer, who has the equal amount of income and financial stability as your conventional buyer in this scenario, at minimum is going to still be $25,000 ahead financially, with money to do whatever they need to do to either move in afterwards or help with anything that comes up within the sale. There's no money that is tied up waiting to be put into a deposit, making this VA buyer, again, a very strong partner. So, writing a strong VA offer. How do we do that right now? First and foremost, Offer your highest and best up front. Pay both sides of buyer and seller title and escrow fees. Do not ask for a termite clearance. Don't ask for home warranties. Offer to close as fast as 17 days. And waive the appraisal contingency. All right. So offer the highest and best up front. Why? Forget about what type of loan we're talking about. Sellers at this point are receiving still double-digit offers on their houses if we're looking at a nice move-in ready home, which is what this buyer is going to be using, so it makes sense. They're not going to be sending counter offers. They're gonna pick the best one and try and work that single deal, and if that doesn't work, then they're going to go to the next best deal and try and work that one. And they're going to work their way down one by one. You might have someone that's less experienced or wants to, believes that they were taught to send counter offers. But in this market, most people that I'm talking to that are taking listings are not sending out counter offers. They've got enough interest in a property to make a decision out of the 10 to 12 that show up. So pay both sides of the seller title and escrow fees. These can be paid as closing costs. This is a way to sweeten the offer for a VA loan. And again, this can be used, with any type of loan as well. But, again, the myth is that VA buyers can't pay closing costs, that we need to get the 3% back from the seller, or, which was how we developed the idea of using these loans in the past. The VA buyer almost always paid them. That was just the way they manipulated the money. But these things can be paid in closing costs. As I used in an example earlier, is new construction. You pay almost all of 95% of all the closing costs involved in a new construction purchase. And there's even more fees within those purchases than there are for a resale house because it's a brand new property. And this can all be wrapped into closing costs. So again, this is a way to sweeten a deal using a VA loan that the VA borrower can manage with their client, meeting all the right criteria. I've done this multiple times as an agent where the house came in at a low appraisal, and the sellers had no money, the buyers had no money, but the buyer, we ended up closing that deal. The buyer ended up saving, several $1,000s because of the low appraisal. So I turned around and said, okay, we'll go forward with it, because in that situation, the seller doesn't have to go forward either. I told them, if you want the house, you need to pay all my clients' closing costs. So while we lost, we took a big hit on that sale because of the way the house was appraised compared to our purchase price or our offer price. But in the end, I got my seller almost 80% of the net income that they were hoping for, because I got the buyer who was using a VA loan to pay the seller side of the closing costs. So it can be done. It can also be, the lender can also create a credit if that buyer doesn't have the income. They can create a credit through manipulating the interest rate to pay for things like this. So where a VA buyer could potentially not pay closing costs or pay very small amounts. So again, making this buyer using a VA loan very strong. Don't ask for termite clearance. Here's the thing. In California, in about, I'd say 40 of the 50 states in the US, a termite report and clearance is going to be needed if you're using a VA loan. This is definitely a hiccup in the current process. This is also something that a veteran cannot pay for within the contract. But my point here is, don't ask for this up front. If your buyer wants this house and is willing to deal with it, you have most likely already explained to them that a termite report and clearance is going to happen. And someone's going to have to pay for it. Don't do it when you're competing against 12 other offers. Do it when they've accepted your offer and you're a few days into contract, working through escrow, and that seller's packing his house. And now you get a termite report that you guys have done, just like when you're doing your home inspection. It's the same type of inspection. You get the report, it comes back and it says, hey, there's $2,000 worth of damage. Well, if you had put this termite clearance request in your purchase offer, that $2,000 could be, blown up to 3, 4, 5, 7,000. I don't know what. It depends on the emotions of the seller as well as the experience of the listing agent, where they could say, we don't know what that is. But at that point, at the offer price, it's still an unknown number. So don't get in the middle of fighting with people that maybe don't need this. Just don't ask for it. Get it done in escrow and then negotiate the $2,000. Most likely, this buyer would be willing to pay $2 more for the purchase of the house if this is covered, if they really want that house. Okay? So that's how you would deal with that. You deal with it in contract, negotiate it with the request for repairs, and get it done that way. If the deal is going to fall apart over the $2,000 repairs, it might have anyway. But you never even got a chance to figure it out, because you probably lost out by asking for this potential work or potential bill up front when there's 12 other offers to choose. Again, don't do it. Now, in contract, you're only negotiating with the seller. All right, number 4, don't ask for home warranties. This is just a no-brainer. Look, it's about, I think, probably $600 to cover just about any size property here in California. Pay for it out of your own commission. You're going to earn enough money. Give it to them. And this goes for any type of loan. Just these are dumb things that we need to get away from right now, because this is such an aggressive seller's market. And by waiving this, I like to actually waive this, like seller does not want this. And if you read the document, the next paragraph in the purchase agreement, and I'm not sure on the new one because I haven't seen that up close this way, but by waiving the home warranty in escrow does not stop your buyer from purchasing their own. What it does do when you waive it, it means escrow doesn't have to worry about it. It means it's not part of any consideration to get the loan and purchase closed. But it does not stop your buyer client from either you buying it for them, their mom buying it for them, or them paying for it themselves, if it's something that's important to them. Offer to close as fast as possible. Like any other loan, the biggest delay is always waiting on the appraisal. We have multiple lenders that will allow us to move through the loan process, getting to the point where we're pushing out a CD for final signatures, which puts us in a situation to, as long as everything comes together in the following 3 to 4 days, we could close the loan as planned, which means that we can absolutely close in 17 days if our buyer has gotten us all the documents that we needed to get them 100% pre-approved, TBD underwritten, to the point where they're almost basically walking around with cash in hand that they would get from the lender. We've pushed their loan so far with paperwork that we're literally waiting on the appraisal. And a VA actually over conventional or FHA, they have very strict guidelines of when the appraiser has to get it done and back to them. So as long as we order those appraisals like day one, the moment I can get the contract paperwork, I'm going to order the appraisal. But I can already be pushing paperwork through to the point of getting that CD done, which is the next biggest thing holding up a closing. We can have the CD out while we're waiting for the appraiser to come back, and we're ready to go. And at that point, once that CD's taken care of, if we need to make changes in the last 4 days based on an appraisal gap, changing the numbers around, that can still easily be done without delaying the close. Last thing, waive the appraisal contingency. If your buyer is financially capable and they're comfortable waiving the appraisal, meaning that they're willing to pay today for a little bit more than if they're willing to pay more than the property is appraised at today to acquire it, to be able to move in and live in it and start building equity, waive the appraisal contingency and get your contract accepted. I've shown you that the VA buyer can legally do that. The only difference is that extra document and signatures have to be collected as we work through the process. But it's just as simple as long as you're using a conventional loan, any other type of loan, as long as your buyer is financially capable of making the financial commitment to the seller and the lender. That's it. And that's the same with conventional. If it doesn't appraise, they have to pay they have to cover the gap, and they still have to put down a deposit. The VA buyer has to cover the gap, but they're still putting down $0 as their down payment. So at the end, these are the reasons why I really believe that this loan product is the best type of home loan. It's by far. Now, we don't ever compare a VA buyer to an equal conventional buyer because they assume that there's something different. But I can tell you, I've worked with so many VA buyers doing home purchases as well as loans, and they're making 10, 15, 20 grand. You know, they're getting $3,000 and $4,000 in housing allowance, in food allowance for their families, because that's how it works. A lot of that money, the food allowance and the housing allowance, that is tax-free money to them. So again, they're using money that's tax-free to them to buy a house that's gonna to buy a house that is gonna earn them interest and improve their financial stability, making them again a stronger buyer to work with. Every part of this loan helps this borrower become stronger financially, and we just don't understand it enough. And we see a lot of first-time home buyers using a VA loan, and a lot of times that's, you know, at the lower price points. But today there is no low price point anymore. I mean, there is a lower one, but I mean, we're talking county loan limits in $800,000-$900,000. You're gonna have to make a certain amount of money to even qualify to buy a property in today's market. That VA buyer is potentially as financially capable as a buyer using any other loan type. So be more confident, you know, look for this client. These are some of the best people to work with. If you build your business on referrals and you help a VA buyer win whatever real estate, you know, goal they have, whether it's buying or selling, they're going to send you referrals. They're going to do more business with you. The last 4 VA buyers that I've worked with have refied with me and have sold their properties with me. So, you know, it's in of all those that I would think most of my repeat businesses probably come from my VA clients because they're the work that got them to be able to use this VA loan builds loyalty. They are loyal to the US. They are loyal to the military. They believe in their friends. If you do a good job for them, help them get into a house, they're going to send you referrals. And that's, you know, again, why I think this is the best loan product ever. So if you have questions, please feel free to reach out to me, something specific, a scenario, anything you can. We have multiple lenders that work VA. We have, you know, being a broker, a lot of times we have even better rates than, you know, the typical Veterans United, you know, all the military banks. We're going to have better rates than them. And if they're going to a bank like, you know, Navy Federal, they're not going to get nearly the attention they need up front to be able to be in a situation to close in 17 days like I suggested, because the banks, whether it's VA or conventional, but again, more importantly on VA, is a lot of those lenders, they don't do a lot of work until they actually have the contract, where we're going to get everything done and ready to move from loan estimate to loan CD as quick as possible, even while we're waiting for the appraisal to come in. So again, this is a great product. These are great buyers. Two buyers that are financially stable, making similar amounts of income, go with the VA loan if they can. It's a smarter loan for them, and it allows them to use their personal money in more ways than someone using a different type of loan. So I hope this was helpful. Please, like I said, shoot me any comments, follow up later. I'd love to help you and any of your VA buyers or buyers using any type of loan. Thank you.
Awesome, Andrew. Thanks a lot. That was a good presentation.
No problem. Let me stop this sharing. All right, man. I actually am going to jump off, and I got another meeting I got to get to by 10:15. So again, if any questions come up, just I'll be happy to follow up a little bit later.
Okay, sounds good. All right, thanks.